Our next guest says the charts show a rotation out of that red-hot tech group and into another. Renaissance Macro Research's Jeff DeGraff joins me now to explain. It's good having you back because you were darn right when you said that chips looked vulnerable, that NVIDIA looked vulnerable, and we had this 15% correction. Now, who knows whether it's going to be quickly bought and we're back on the run again, but what led you to view that at the time you did, not that long ago, and then now where does it go from here?
Yeah, again, what have you done for me lately business, right?
I told you, yeah.
It's a good point. It was really driven by sentiment, Scott. What we do is we parse the option activity. And when we look at when the premiums being paid for upside are substantially different than that being paid for downside, it just says the expectations are too high. There's a few other things that we do around that. But that's where we just say, look, this is not a high probability outcome for us. It's not something we feel comfortable with. That's not bearish overall. It usually ends up being about a 3-month consolidation. We had something very similar as an example back in February. We got that 20% correction that your previous guest was mentioning. And I think that's what we're in for today. The only difference I'd say about today versus, say, the spring is we really are crossing the seasonal Rubicon here for semis. The summer months, particularly the third quarter, ends up being the worst quarter for semiconductors. Basically, historically, if you follow the seasonal trends, you want to be a seller of semiconductors in late July, and you want to sit on your hands until the mid part of October, and then that's where the strongest seasonality kicks in. So if you're playing that calendar, and interestingly enough, I think a lot of things are supporting that, both sentiment, momentum, the failure of an oversold condition, et cetera. I think that's what we're setting up for. The good news is I think NVIDIA is still in a long-term uptrend. I think these corrections probably prove to be viable. I think you just have to temper that sentiment, and I think that will happen. We probably take it down to close to par, so 100, 101 is gap support, but that's where we'd start looking and sniffing around to add to positions there.
The only thing I guess I would say to that is it's difficult when you start tying historical precedent to an industry that is, part of it is being reborn by the whole AI transformation. So the calendar doesn't know about AI. You know what I'm saying?
No,
so this could be different.
From a seasonal perspective, 100% I agree with you. I would just say behaviorally, it is very much like what we've seen before, right? The circumstances are always different, but the way people react, I always tell clients, there's 3 things people can do. You can buy, you can sell, you can hold. And there's really an infinite number of reasons to why to do all of those things. But when you put the behavior together with the momentum, that's what has us more concerned. I would look at seasonality as just icing on the cake there.
All right, so if it could get worse from here in semis, which is principally the call you're making, what conversely could break out from here that maybe not enough people are focused on?
Well, I think there's 2 things happening today in particular that are interesting. Obviously, the weakness in semis, but the day is generally a broad day. Last I looked, the Russell was about 700 names up versus 300 down, so that's a decent day. And then you have biotech, which the NASDAQ Biotech Index is actually breaking out here, which is really, really good news. It's coming out of a big base formation. The fund flows have been pretty negative, so it's also a more speculative group, and that's what I like to see, which is we're not taking money away from, say, semiconductors and some of the high-octane names and going into staples. They're actually just rotating those dollars into other areas that have the growth opportunities, and I think that's more bullish than it is bearish.
I see you're also looking at the metals and miners.
Yeah, this is a tape where, when we look at strategists' forecasts and what they've been doing, they've been really kind of clamoring all over themselves to have the high forecast on the street. We follow that historically. And when that starts happening, it's not necessarily bearish for the market, but it is points where you don't have to be really aggressive and chase. And so our whole point to clients is look for oversold conditions that are in good uptrends. Metals and mining are absolutely one of those industry groups that's in that uptrend that recently got oversold. And so this is the area that we reallocate dollars to those oversold conditions and take away from some of those extended names that we think are due for a pause.
But you feeling pretty good overall about what this market can do over the next 6 months?
I do. I think it's going to be a grind, though. I think it's going to be rotational. That's why these oversold conditions are going to be important. I think we have to temper some of the enthusiasm. I think that's going to happen a lot with this correction that we think we're going to get in semiconductors. But I think it's all still a bullish setup for at least the back half. We've got a 5,800 price target on the S&P that we put in place back December of last year. We're still comfortable with that. We've been hitting those milestones as we see it. The sentiment's the one thing that I think just needs to be cooled off a little bit, and we know from history that sentiment usually responds to price, and so some type of correction consolidation here in the summer should set up for a pretty good end to 2024.